Hey everybody, welcome to Breakout Wednesday for the 20th of September 2023. It's currently about 10 p.m. on the West Coast, midnight on the East Coast. First of all, remember, this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. Okay, so here's a chart of the All Ords just quickly before I jump into stocks. Really has been going sideways since those 2021 highs, okay, in reality. And obviously there's been some big rallies during that time, but it's been, look at that, so just pretty much sideways. Haven't really made much progress since then, okay. That's the All Ords in Australia. Let's just look at, say, an S&P 500 ETF, okay, IVV, right? So this is one I haven't talked about much, but obviously it's one of the big ETFs, most popular one for the S&P, and it paints a different story, right? Like, it's obviously been in a massive uptrend since breaking this base, and it looks very much like, say, let's say, for example, the NASDAQ 100 ETF, okay, that's been in a huge uptrend. And so I definitely think that, my long-term investments and stuff in the US markets, in the S&P and the NASDAQ, it's been some really, really good times for it. Whereas, my beloved gear, not that I've sold any, I've done okay in gear because I've been buying these dips, okay? But overall, if I was just randomly dollar cost averaging in willy-nilly and not trying to time it, I really wouldn't have done that well at all, okay, on the gear. So, I think it really pays to have a horizon beyond Australia's shores. Who knows if that's going to continue, but it's a big world out there. And the outperformance of the S&P is not a new thing. All right, look back through history, and study it. But the S&P has been an absolutely fantastic place to park money in the long term. Okay, not even including dividends in there, right? Just including the long term success rate and returns of the S&P. All right, so that's enough on the long term shit for tonight. Actually, I'll talk a bit more in a sec. Like long term stuff. Obviously, they're having a little bit of a pullback in a lot of the US stocks. Techs, that's a tiny pullback, isn't it, on the NASDAQ? But there are some pullbacks going on out there. In my individual long-term positions, I'm still going pretty well in a lot of them, like Visa and still up near new all-time highs, Google up near all-time highs, but, some stocks that are absolutely giving me a good ride old spanking, right, which ResMed never would have been in that stock still if I was trading it. But you got to remember, I've been in this stock since, way back here, and then added, and maybe I'm a complete dumbass for still having a long-term position in it, because this is a hell of a dumping that I never thought ResMed would have. Okay, but I was in it for this dumping here, okay, during COVID. I never sold my ResMed. I was also in it for these ones back here when it brought out an earnings, missed on earnings back in 2019. I remember gap down, it was like $13, $12, something like that, and I was shitting myself, and it recovered. That over the long term, it's just paid to be really patient with it, and I'm not gonna break my long term thesis on it because of this little pullback. Okay, I'm getting spanked on some long term stuff. Long term investing is hard. Really, really is hard. You need to have such resilience and just belief in what you're investing in. Okay, very, very easy to have long term belief in the S&P, isn't it? Because it's a basket of stocks, and you can look back through history and know that this thing is very safe. Okay, if you're buying dips and you're timing it smartly, it's just it's pretty much the safest bet you can have, right? It's different when you're picking stocks. Okay, I'm pretty confident Google's not going to drop 90%, but it could have a 50% pullback for sure. Anyway. I've crapped on enough about individual stocks. There's been some good times out there, but certainly I'm not immune to pullbacks in my individual holdings, am I? It's just part of being human, and investing's hard. But the trading, funny enough, I find trading a lot easier because it's really what I kind of focus on. The main stock I was talking about, kind of my last I don't know when it was, 2 or 3 weeks ago, was SMR. Okay, and I talked about, it's the only thing I really talked about in the last blog kind of I put out 2 weeks ago or whatnot, the written email thing, and how it was really the best VCP setup in the market at the moment back then, and how it had every single thing going for it. Okay, go back and listen to just my last episode, right? And it really was perfect. Okay, and I would love to say that there were trades like this, there's trades like this around every week. There's just not at the moment. It's just not the market to have trades like this every week. There are trades like this if you really just work at it and keep looking. I've got a few tonight I'm going to talk about which maybe are setting up, but I think most of them still have ways to go, but if there was a stock, there's been so many over the years that I've said, this is a sort of thing, just print it off, put it on my wall. I've got a few old charts that I've got printed off and put in places around the joint, the house and my office and all that shit, to remind me, even my screensavers and my computers and all that junk. So just remind myself, like, trading doesn't have to be hard. You don't have to be trying to outsmart it. If I just find setups like this, all right, I'm just quickly going through it again, right? Just why was this so good? Had this flush out below these lows, okay? Just a quick flash out. Look at these wicks, then close above it. It had all the moving averages coming together and converging, then had higher lows, and it had like 3 or 4 tests of this resistance, and then it had massive volume drying up here before the break, a tiny little handle, and then boom, all right? And just an expansion of volume on the breakout. We also had, some pretty clear ending signs of this downtrend ending, okay? It was just a whole bunch of shit that came together all at once, but the main thing is just this pattern, how tight it is, okay? And the volume dry up during that pattern, and the clear, obvious resistance. And then it was in a sector that at that moment in time just seemed to be coming into favor, like a lot of the energy in coal stocks, which are setting up at the same time, okay? And just not on the Aussie markets, but if you follow the NISI closely, and a lot of the stocks on the New York Stock Exchange, like the energy stocks were on the big down days in the market. Those energy stocks weren't down, okay? I can run through a bunch, but I'm not going to, but just do some research on coal stocks on the NISI. There were big down days in the market where these stocks were not being affected whatsoever, okay? And then these guys were all breaking out, and it just had every single box ticked, okay? And then it really has been one of the nicest movers in the markets recently, okay? I did trim half today, all right, at 3.49, just because, I didn't know it was going to keep going like that. But anyway, that was dumb. Maybe I should have just held tight. But it's a good move. I'm going to hold that other half and try and eke out some more there. Okay, just perfect setup. And if there's a stock out there to just print off and just plan on your wall or your screen or your screensaver computer. This is it right now. Okay, all you got to do is find things like that. It's easier said than done, because we're all impatient. We all want action. And I'm telling you, action is what kills most traders, okay? All this shit, people want live data, and, they want updates during the day. It's so dumb, okay? Just taking one trade a month is really all you need to grow your account. If it's one trade like this, which is just perfect, that's so much more smart than taking 10 trades, okay, and having 9 absolute shit setups that you're just taking because you're degenerate and you're bored and you want action like some sort of addict, or the smart guys will just sit back and take the best setups that come along. I'm not immune to it too. I take the odd sucker trade. I think everyone does, but I think the difference is I minimize it very, very rarely, okay? Whereas I know a lot of people out there just can't handle it. They just need action. So now some setups forming. Just before I get into that, some other interesting stuff. The MMS trade that I was in from back here, this is perfect too, right? If you want another perfect setup to study, holy shit, go back to the talks I was doing around here of the MMS trade when it's setting up, and just look at this base and how tight it is and the volume characteristics. Anyway, had a massive move after it that I went through a lot, and then just look at the return to earth it's had since then, okay? Like, holy shit, these trades. It's different if you're a long-term investor. If you've got a 20-year time horizon on this, who cares what it does, right? There's no even point even looking at it, I'll go for weeks without looking at some of my long-term stuff. It just is irrelevant, okay? But when you're trading it, holy shit, if you don't manage it and get out and take your profit, then the market will humble you, and usually you'll give it all back and then some, okay? As soon as you get complacent, start thinking you're good and smart and that the market's just going to keep going up, you're generally in for a bit of a spanking, and so I think the other good example is WTC, because this was another perfect setup to study for those who are just getting into this and just trying to find their feet. This was just a perfect VCP, perfect base. This was a Davis box that came up in just my trusty old Davis scan that I'm doing every day at the moment, just this one, okay? And it doesn't really matter if you press this Sam's Davis or normal Davis, kind of, they're both finding the same things, okay? Really. And so and it just broke up, grinded higher. I sold a bit way too early by mistake because I stuffed up, and then I rode the rest of it, right? But then the return to earth on this thing, you got to respect these stocks, because when the music stops and you're still dancing, instead of selling, then you're gonna get hammered, okay? And you're gonna be humbled. And anyway, I thought that was interesting. The other thing, just before I get onto some new setups, is WGN. Okay, I didn't trade it because I was scared about all these resistances back here, and I was a bit worried about the liquidity. Could I actually get a decent position on to actually feel it and to make it worthwhile and that? And I decided not to. Okay, but there's something to be learned from it, in the sense that when you see major resistance, it's just mind-blowing resistance. It usually is always significant. And with WGN, it was all the moving averages started coming together. Really just, we had this big flush here below lows and then reversing. Flushes don't have to just last a few days; they can last a few weeks, a few months even. It doesn't matter. Okay, it takes out these lows, and then the market says, nah, stuff that. I don't want to go lower. And it starts rejecting these lower prices, gets above these lows, back above these lows, and then it forms this most kind of crazy base there. So cool to look at, hey? And then it finally breaks up above it, and all the signs of an uptrend are there, okay? So anyway, thought that was pretty interesting stock. I watched that unfold actively. Unfortunately, it's one of those times I didn't step up and pull the trigger, right? Okay, some new setups I'm finding interesting at the moment. A2M's in some apologies, guys. One sec. Sorry, guys, just coughed up a lung there. So A2M is in some serious shit. Okay, it's breaking new lows here. It's not really a setup. I know most people don't short, but it's interesting. Hey, there's a lot of money can be made in these falling stocks. Just like another one I'm watching is Riot. Okay, it's just an old crypto stock that I was riding back during that last crypto boom, and did really well on it. For those that can remember, okay, we're getting long here. I think it was $4 something from memory, right? And holy shit, that was one of the best moves we've ever had. Anyway, reminiscing, but now we're just forming this pattern, and this is as volatile as all hell. If you trading this thing, it's like you got to hold onto your hat and try not to look at it too much. But shit, this thing could be in for a bit of a fall if it breaks that. And now moving on to some other real base setups. Okay, this is just base setups on the ASX now. Okay, here's a chart of ARB. Right, talked about ARB heaps. It was a COVID darling because everyone's staying home, fixing up their utes, all that sort of shit, going camping, blah blah blah. All right, pretty sound business. They've been obviously hampered, interest rate rises, inflation, costs of labor, everything going up, and so they've been affected by a lot of the stuff that a lot of businesses have. But they have a pretty sound company, pretty sound business model, and the base, just technical base on this is just looking back on a larger time frame, just thinking to myself, shit, this is a significant base here. Okay, that this is forming. Okay, we've got a base that's kind of started with its high back on the 15th of August 22. Okay, so it's over 12 months base in now, and let's just flick to a weekly. Okay, so here's a weekly chart. It's pretty obvious, this base, and I'm in the business of not ignoring big bases, because my experience is the bigger the base, the bigger the move. And bases tend, if they're at the stage one base, Stan Weinstein's book, when you find a real true one, they can be some of the most rewarding setups. And we have a pretty classical, massive mother of all bases. Okay, so ARB is one interesting stock. Stock that came up on trusty old Davis is this puppy here. Where are we? Okay, C79. So C79, obviously, it's in its third box, and if you do your Davis scans and just searching for boxes, and then in the last box, and you just scroll through here, and you just find stock after stock of just those examples weren't that good, but if you just go back through it, and you'll find stocks that have just been, there's a few examples of stocks in like 7th or 8th boxes, right? And so it just finds stocks in uptrends. It's not rocket science. It's just a simplistic way of finding stocks in uptrends. Any dumbass can do it, and I just love it because it just finds me nice clean bases. C79 is just sitting there in its latest box, basing away. It just, for me, it's just, you're not ready yet. Just give me another couple weeks in there, please. If you can just, if we look on a weekly, it's just 1, 2, 3, 4. It's just not quite like the best bases, continuation bases, 7 to 8 weeks. Okay, so or more, but 7 to 8 weeks is great. If this can give us another few weeks and just stay in that tight range, then holy shit, it could be a spectacular setup. So I'm watching and I'm waiting. C79. Okay, the other one, and I have talked about this one before, is Dominos, right? Now, obviously, Domino, everyone knows Domino's, okay? Obviously, another COVID darling, got impact, once again, inflation, had massive issues with cost of labor going up, and inflation and interest rates, all that sort of shit, right? And so they got absolutely hammered. They started putting their prices up for certain products, which hit their business model because they're catering to, a lot of people who really want cheap food, and then they put certain prices up, which pissed a lot of people off. They lost some customers, blah blah blah. They're working through all that, okay. But they're a company that, just beside all that, they've proven themselves over the long term, okay, of bouncing back and succeeding, okay. I don't think overnight they're just going to suddenly stop succeeding, and then I think they're going to figure their shit out is what I'm getting at. But then ignoring all the fundamentals, okay, and just looking at the technicals, huge downtrend that maybe has ended, all right. Huge low, right, massive significant low with a massive flush out, okay. Doesn't want to go down, but stay below that low, comes back up, flushes out. All the moving averages are starting to come together, and we're starting to form a base. This base is a little bit premature and early. I would love it to base longer, okay, but a bit like the zero trade, that I got in back here, it was a little, actually kind of wasn't too, it was a bit later, wasn't it, but anyway, the DMP trade, I just would love it to be longer, and these moving averages come together more, but I think maybe I'm still going to jump in if it breaks this base, because it might not give me the chance. And not everything's perfect, but shit, that is starting to show some serious signs of bottoming, some relative strength to the overall market, big gaps above it, a lot of room to go up. Anyway, Domino's is high on my list of stocks I'm watching. Okay, the other one is Data. So Data is a tech stock, and they're also showing major signs of bottoming. Okay, massive lows, flashing out here, flashing out here, flashing out here, here and here, 3 flushes, each time reverses, base here, bang, big volume, and now it's basing, okay, and showing relative strength on these down days. It's kind of a bit extended up there. I really want it to chill out and catch up to its 50-day moving average, which is green line. The 50-day really is my line where I want, the best trades happen when they're breaking just above the 50-day line. I don't want it to be too extended from that 50-day line, because I just think that the risk of a fake out is much higher when these stocks are a long way extended from the 50-day line. If you look at the SMR, for example, okay, when it was breaking out, the 50-day line was just here, it's just sitting above it. It's definitely not overextended. It's all coiling up like a spring. It's ready to just pop and just go for it, all right? And it's but Data at the moment, Dicker data is just a little bit extended. I just want it to chill and just base. But anyway, Dicker data is on my list. Bit like TNE, alright, another tech stock that big flush out, big low here, flush out, boom, and then a buck back above it, massive resistance, 1, 2, 3. This is a stock with a long-term history of success, okay, trending up is what I mean by success, and now it's forming this base, okay, and with clear resistance. This is coming up in Dava scans, Frank Pattern scans, triple resistance scan, okay, so I do this one every day, Patterns bench. I got them all ticked there, but sometimes if I'm rushed that day, I'll literally just put tri-point resistance, do that on daily and weekly data, and then it found TNE for me. Such a good scan, that one, and it's just a really nice clean base watching that, to jump in that on a break. And what else am I looking at? This one's not ready yet, LYL, but you can see the resistance. It's too immature for me. I just want it to chill for longer. I don't know if it will. And then on the NASDAQ, NCNO, right? So a tech stock that I just want it to once again chill out for longer. It's had kind of 4 tests now, but this last one, it just needs to now come down and form a little handle. If it can do that, then the setup will be close to perfect, okay? And I'll be jumping in on a break. So that's it, guys. A bit of a long one this week, but I missed a few weeks. And let's hope another trade like SMR comes along soon. Hey, this is what it's all about. But in a good market, they'll come around every week or so, and they'll be all over the place, and you just be going for it. But in this market we're in right now, you got to hunt. It's like a surfer trying to find that perfect wave. It doesn't come along every day. Take care, everyone. Cheers.